How wonderful life would be when you don't have to work for money, but money works for you. Fantastic life. खाओ पियो ऐश करो आराम करो, money will work for you. Stock market investment is one of the ways through which you can make money work for you. अब मुझे भी ऐसी जिंदगी जीनी है. So recently I read this book, 7 Secrets to Investing Like Warren Buffett. It's a very good book. Very simple layman language used in this. Now me being a chartered accountant, I was familiar with most of the concepts written in this book, like PB ratio, PE ratio, balance sheet, cash flow, current asset. But even for someone who is not a CA, who is not from a finance background, will be able to understand everything written in this book, such as the simple language used. Now the purpose of reading a book is to learn something new. कुछ ना कुछ नया सीखने को मिलना चाहिए, otherwise it's waste of time. So when I read this entire book, I was familiar with almost everything in this book, but there was one valuation model that I learned for the first time. And I was really happy. This valuation model was used by Benjamin Graham, father of value investing. Now what is value investing? Value investing is when you invest in a stock whose market price is lower than its intrinsic or fundamental value. So let's say if the intrinsic value is 100 and the share is trading at less than 100, maybe 80 or 70, this is where the gap is there. And that's value investment. You invest in a stock because you see a room for value creation. So Benjamin Graham extensively used this valuation model called net model. The calculation is very simple. First, you have to calculate net current asset. Net current asset means current asset minus total liabilities. Total liabilities includes your current as well as non-current liabilities. So current asset minus total liabilities will give you net current asset. You divide it by total number of shares, so that will be net current asset value per share. So let's say it comes to 100 rupees. Now, as per this model, Benjamin Graham says कि आपको तब invest करना चाहिए when your market price of that share is at least at 20 to 30% discount of your net current asset value. तो suppose अगर वो 100 rupees है and your share is trading at 75 rupees, there is a gap. There is a room for value creation. You invest in that stock. So that's a new model that I learned. I never heard of this model before. While I know many valuation models, but this was the first time, and I really liked it because it made a lot of sense. कि आपकी सारी liabilities repay करने के बाद भी you are left with some current asset which will be used to repay shareholders. But overall, it's a good book. लेकिन only reading a book or learning principles or knowing certain stock market principles will not help. Bruce Lee once rightly said, knowing is not enough, we must apply. So if you do want to make money work for you, it's important to apply what you learn. Let me know if any of you use value investment models, valuation, such kind of valuation models to invest in stock markets, and how has your experience been like? But once again, in the end, fantastic life if money works for you.